Chasing momentum is the #1 account killer in retail trading. The traders who consistently profit from momentum do not chase. They wait for one specific pullback setup. Here is the entry, stop, and 3 to 1 target. Here is the takeaway before anything else. Never buy the first move. Buy the first pullback. Patience is the edge. Momentum strategies have outperformed the S&P 500 by an average of 4 to 6% annually over 20-year periods according to multiple academic studies, making it one of the most historically validated edges in the market. Now let me show you where this shows up on today's live chart before we break down the framework. There is a momentum setup forming on today's live chart right now. Let me show you exactly where the higher low is before I walk you through the rules. Here is the problem costing most day traders and momentum traders money. Chasing momentum is the #1 account killer for retail traders. They see a stock moving, they feel the FOMO, they buy the spike, and they become the exit liquidity for the traders who actually plan the trade. The problem is not that momentum does not work. Momentum is one of the most powerful forces in markets. The problem is the entry timing. Buying into a vertical move is buying at maximum risk. The professional move is to wait for the setup that comes after the initial spike. Here is the exact framework. Step 1. If a stock has moved at least 5 to 10% on above average volume, mark the high. That is your momentum confirmation. Do not buy there. Step 2. If price pulls back to the 21 EMA or a prior breakout level without breaking the prior major support, the setup is loading. Watch and wait. Step 3. If the pullback forms a higher low and volume dries up on the down candles, the spring is compressed. This is the highest probability entry zone. Step 4. If price breaks above the highest pullback candle on rising volume, enter. Stop below the higher low. Trail with the 21 EMA. Exit when price closes below it. Here is the psychological reason this works. After the initial spike, weak hands who chase the move are shaken out during the pullback. They sell at a loss, adding to the downward pressure of the pullback. When the pullback ends and forms a higher low, it means buyers are stepping in at higher prices than before. That is a structural shift. Strong hands are accumulating. The next leg is being loaded. Your entry at the higher low breakout is the exact same entry institutional traders are using. You are no longer chasing, you are reading the market correctly. Coming up, I am going to show you the momentum setup on today's hottest mover, the exact trigger, entry, and where to place the stop. Here is what the tape looks like right now. MSTR is down 4.2% today. This name is showing real momentum today. Check the daily chart. If it is trending cleanly and today's move is on expanding volume, this is a live momentum candidate. I am using today's live chart to show you exactly where these levels appear. Tesla ran 30 points in 2 days on high volume, a classic momentum ignition. Every trader who chased day 2 got stopped out when it pulled back 12 points over the next 3 days. But the pullback formed a perfect higher low right at the 21 EMA. Volume on the pullback dried up, exactly what you want to see. When it broke above the pullback high on day 6, it ran another 25 points in 4 days. Traders who waited for the setup made 25 points. Traders who chased the spike lost 12. Same stock, completely different outcomes based on one thing: entry timing. Here is your complete checklist before you take any trade using this setup. Daily trend is clearly defined. Price broke the prior session high or low. Volume is expanding on the move. RSI is above 50 for longs, below 50 for shorts. Stop is at the entry trigger level. Screenshot that. We call momentum setups live every morning in Discord, before the move happens, not after. Come trade with our group. Link below. This is ChartNavigators. A new setup drops every Sunday, so subscribe and hit the bell if you want the next one when it lands.